All right, for everybody that's joining, thank you for coming. My name is Nikisha Paul Jones. I am the real property nurse. Most people call me Keisha, so feel free to call me Keisha. I am a realtor and a registered nurse, and a few other things. But today we are going to focus on mortgages. Um, I know lately I've run into a lot of clients who had a ton of just like misinformation or uncertainties about mortgages. And, it's a lot of misinformation out here and on the internet, just being fed to people through other people. And I'm like, you know what? I want to be more of a resource to my clients and just people out there, so let's get some real talk going on with some real professionals and some real experts in these fields that really know what's going on in the ins and outs. So tonight we're going to be talking about mortgages. And if you guys have any questions, we have Jenel, who's one of my preferred lenders here today, and she can walk you right through it. Besides that, I will let Janelle introduce herself, and because I can't, Janelle does way too much. So, Janelle, you want to give her a brief intro?
Sure. So to keep it simple, I'm Jenel Davis. I have branded myself as Mid-Atlantic Mortgage Girl so that it's easy to remember when people go to look me up. So they
Mm-hmm.
oftentimes don't know my name. They just know me as Mid-Atlantic Mortgage Girl, but my if you want to know it and use it. And this is my 26th year in business. I started when I was 22 years old, right out of college. And I'm fascinated by the way that lending works and why it
Mm-hmm.
works. So I think the big thing is that I've always tried to understand the why so then I can explain it to our clients. So
Mm-hmm.
I know why we have to ask for certain things or why things have to be a certain way when it comes to lending. Me understanding the why behind all that helps my clients feel better about maybe getting me an extra document that I need or what have you. So very passionate about helping guide clients through the home buying process and making it as smooth as possible and even a little bit fun. So
Right.
that's who I am.
Awesome. So, if anybody in the chat has any questions, feel free to drop them in. But Janelle, I have a few questions. I know a lot of times, you know, um, I have clients ask me questions like things like, does my credit score determine my interest rate? Right now, interest rates are the big topic of discussion when we're referring to mortgages and things of that nature. So, you know, um, for any potential buyers or anybody that's thinking about purchasing a home, does their credit score dictate their interest rate?
Yes, it does. It's not as huge of a difference as people think. Like 100 points sometimes is negligible depending on the program, but in all reality, yes, the higher your credit score, the more options you end up having and the better you can negotiate.
Mm-hmm.
So to give an example, the top tier in mortgage lending is 780. So that's going to open up eligibility for pretty much all the programs that are out there. The lowest credit score that we can do is 500, which people are very, very surprised by that. But a lot
Yeah.
of times people have a low score due to it could be anything, but they
Mm-hmm.
sometimes would have a large lump sum of money to work with.
Mm-hmm.
In that scenario, we've helped a lot of people that have a very low score purchase a home because you only need 10% down if you have a 500 credit score. So it's really not that crazy. So
And see, that's a big deal too, that a lot of people are misinformed about. Everybody thinks that they have to have a perfect credit score, they have to have a perfect credit profile, that they have to have 20% down, and that's not always true. So, that's why these conversations are very important because it allows people to hear these things that no, there's no like perfect scenario. There are people with great credit who have issues sometimes, obtaining a mortgage for different reasons. So, I'm glad that you broke it down more about that.
Yeah, so I wouldn't get super hung up on your credit score. If you have a 580, you can do some really great programs. So
Hmm.
once you get under 580, you need more money, significantly more money. So
Right.
kind of the threshold, but sometimes people have it. So I don't like to box us into any corners. I just like to have a conversation about what's going on because in a 15-minute conversation, I can uncover so many different solutions. Just
Right.
experience of working through thousands and thousands of applications over 26 years. So
Yeah.
all about asking the right question. So I don't think that any potential home buyer should count themselves out at any,
Hmm.
but a 15-minute conversation can help us at least maybe uncover a solution where they think they can't buy, but they can, or
Right.
we can get a plan in place for them. If they're motivated, we can give them the next 3 steps to get into place before we can take a step after that. So I don't think anyone should count themselves out.
Right. So Grace just posed the question. She said, what does a credit score need to be to get down payment assistance?
I would say generally speaking, 620 would be good. Some of the better down payment assistance programs require 620. We
Hmm.
do have one program that will allow 600, but it is not nearly as good as the one that we can get for 620. So
Right.
somewhere in that like 620 plus range would be ideal to get down
Right.
payment programs. And we can talk about down payment assistance programs either now or later.
Yeah. Yeah. Whenever you want. That's absolutely fine because that's another big topic for mortgages as well is down payment assistance and how much does a person need for out of pocket costs? I think that's a big one that a lot of people, are afraid of, like, how much money that they actually need to purchase a home. And sometimes, there's scenarios where people end up getting so much assistance, they don't really need any money out of pocket. So, it just depends on their situation.
It does depend.
Um,
What I think is more important is the strategy. So
mhm.
give people a lot of help and come up with a lot of solutions. It's just kind of nailing down the strategy between the mortgage lender, the client, and the realtor. And if we are all on the same page with the strategy, we can be very successful.
Yes. So one thing I always tell people that I want you to give your opinion of this. I don't think people should just get pre-qualified. I think people should, if they're going to go to a lender, get pre-approved. Don't go for a pre-qualification. I feel like that's a waste of time. How do you feel about pre-quals?
It depends on their time frame. So some
Hmm.
people want to get a sort of like an idea if they're anywhere in the ballpark. So what I do first every time anyway is pre,
Hmm.
because if they're so far out of range right now, sometimes it doesn't make sense to have their credit reviewed. So
Okay.
we do a pre-qual as part of our process. And if they're
Hmm.
now, if I want to buy now, if I'm qualified, then we just do the pre-approval right after that. But I think a pre-qual conversation, believe it or not, is a pretty good conversation because with
Okay.
minutes, so the questions that I ask are: how's your credit? How much in funds do you have to put towards a home purchase? And then I ask about their employment and then their debts. And within 15 minutes, I can know how qualified and ready they are. So that's to me a pre-qual conversation. A pre-qual is any information that I'm able to give without looking at credit, income, and asset documents. And
Okay.
I have a lot of experience in talking to people, so I do feel that I'm pretty skilled in doing that. So
Right.
My pre-qualification conversation often leads right into pre-approval, in the same conversation. So,
Okay.
so here's another thing. People are very leery about just having their credit reviewed haphazardly. So
Mm-hmm.
pre-qual conversation they want that, they want that sense of certainty, if you will, or at least
Right.
that they can be pre-approved before someone just haphazardly pulls their credit. So
Yeah.
I use the pre-qualification as like the step before for
Mm-hmm.
that reason. So I could say like, well, if you're, they usually express that concern that I don't want my credit pulled. So then we can at least have a 10-minute, 15-minute conversation and talk even even some broad numbers. And
Right.
everything seems on track and their time frame is if I qualify, I'm ready, then we do a
Right.
approval. So
Okay.
that's an objection that I get is I don't want my credit pulled. And that's
Well,
okay. We can't do much without your credit being pulled, but we can give you an idea. Now, if you're going to go shopping and looking at homes, you need to have a pre-approval.
oh yeah, absolutely. Yeah, no shopping without that. But 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 I feel like, with the prequel, I think sometimes people think their credit is way better than it actually is. And then you get shocked. Like, okay, once the credit is pulled, it's like, oh, well, now, we see here that you have a few things that maybe you've forgotten about, or, maybe they didn't even know about. So,
I don't find that happens often, but
okay.
every now and then. Most people, so the way that I ask the question is, how do you think your credit is?
Okay.
They tell me. And by that answer, I can usually gauge. And then my next question is, well, what do you think your credit score is? And most people have tracked it a little bit. Now, not everyone,
Okay.
but if they don't know anything about anything, then I can't give anything. I think
Right. Yeah.
every now and then you will have a person that really doesn't know
Mm-hmm.
how their credit is. They don't know what the score is. And at that point, then we have to look at it to really have a sense of anything.
Right. Right. Absolutely. No, I definitely agree with that. Um, so in terms of, like a new buyer or someone who's interested in buying, like what would you tell them to, like, what kind of questions would you tell them to ask a potential lender?
So the most important things, so I would say you need to get a referral to a lender.
Yes. Mm-hmm.
If your mom or your brother or your realtor gives you a referral, that's because they've had success with them before.
Absolutely.
Beyond that, then it gets into the loan details. And most people, what they want to know is, what do I qualify for? How much can I buy?
Mm-hmm.
What will my payment look like at that price? And if I find a house at that price, how much money do I need? So that's really what most people want to know. So I would keep it simple for yourself and try to get those key pieces of information. I've
Mm-hmm.
where some lenders give a pre-approval and have never discussed how much money the person actually needs to buy, which
Absolutely.
leaving too much information off the table. You don't just need to know you're pre-approved. You need to know how much money you need to buy so that you're not in shock once you find a house. So
Right.
that's important. And
Right.
of course the payment is very important to talk about.
Absolutely. Absolutely. I feel like a lot of things are left on the table. I mean, even for my own experience, I had a lot of surprises at the end. You know, I was told initially that I was eligible for a program because I'm a nurse, and then they said, "Oh, well, sorry, you exceed the income guidelines, so now you're not eligible for it. So now this is $15,000 additional that I need,
Right.
that I had to come out of pocket for, because now I'm under contract,
Mhm.
and now what am I going to do?
Yes, that's actually a great point. So another question could be, how thoroughly do you do your pre-approvals? Because we have we have lenders out there in the marketplace that don't
Mm-hmm.
pre-approvals without verifying anything that was put into the application.
Mm-hmm.
Do not do that. We will not do it because there's no sense in wasting anyone's time, including the buyer, either realtor or the seller is opening their house. So we
Exactly.
will not put a pre-approval on paper without
Mm-hmm.
credit, income documents, and asset documentation, and anything else that may be needed based on the information. So self-employment gets a little bit more complicated sometimes. Um, there's
Yeah.
all scenarios, so I'm not
Mm-hmm.
going into every single one right now, but
No, yeah.
usually we can tell if we should get more information before putting pre-approval, just by the process of the pre-approval.
Right. So that's another good question that I get a lot. A lot of people feel like they need 2 years of consistent employment to even qualify for a pre-approval because they maybe have switched jobs, or you know, something happened in life. Maybe they had a baby, or some sort of life event occurred and it interrupted their employment. Can you speak on that, like in terms of your job?
Yeah, sure. That's a big one. I get that question very frequently. It comes to me sort of like, I just changed jobs. Is it going to
Mm-hmm.
for me to try to buy right now? So
Mm-hmm.
say 95% of the time, maybe more, it is not going to be a problem. So the things that we have to be aware of is how much job history have you had overall?
Okay.
How much of a job gap have you had before this one? Sometimes it's 2 weeks, sometimes it's one day. None of that is a problem. A job gap over 6 months,
Mm-hmm.
some of the programs require that you're back to work for 6 months. Now, conventional, believe it or not, you just have to have a 2 year history in your lifetime. So
Wow.
um, it's really, mortgage lending is not as cut and dry as people think. So we are always trying to tell a story and find reasons why an underwriter should give the home buyer a chance. So there's a lot of
Right.
work. People don't realize that it's not just like, oh, you just started that job 2 days ago. Nope, you can't get a mortgage. There's so much more storytelling, I would say.
Okay.
So
Okay.
um the things that do come up though is if someone, let's say someone was salary and then they decided to go more commission based.
Okay.
At that point we can only use their base salary. So if they've done a change like that, sometimes their total income could look better to them.
Right.
Their future income is going to look better than where they currently were,
Mm-hmm.
but we can't use commission income if they have no history. So it's bonus and commission and any type of variable income that we have to look closer at. But a simple change of jobs, if you went from salary at one place to salary at the other place, is not typically a problem.
But what about those people, like I said, like, somebody that's been out on maternity leave? Sometimes that could be like 3 to 6 months, depending on the circumstance.
But something like maternity leave is explainable. So if they're back to work full time, like at their full schedule now, they'll use
Hmm.
the pay at their full rate with full schedule.
Okay. So that's usually something that's, you're able to explain. I mean, you can prove it, because, okay, we have documentation for that, but,
We have to
um,
work full time with their full schedule.
right. Okay. That's
Yeah.
good.
So yeah, I wouldn't get hung
What?
up of the job change stuff, or have a conversation. Have a just a 5 minute conversation about job. We try to make everything work that we can.
Okay. So I see some people in the chat. Does anybody have any questions before I just keep asking Jenel questions? Because I can do this all day. All
I
right.
So let's circle back around to do you need 20% down?
Oh
That's
yeah, that's a good one.
and no, you don't. So there are a ton of programs. They've revamped the mortgage product so many times too, and a lot of times they do it because of the need in the marketplace. So we have programs like our Home Zero program requires 0% down. The only thing that's needed is closing cost. And essentially, if you could negotiate it, you could get the sellers to pay for that. So
Right.
it's all about the strat. It's always back to the strategy again. Now we are in a pretty competitive area still.
Right.
The Mid-Atlantic region does not have extremes. It stays pretty steady even when other areas in the country are, the market is how do I want to say it? Is maybe getting a little softer. We don't
Mm-hmm.
have that as much here in this Mid-Atlantic region because the area is so desirable, being between Baltimore and Philadelphia, New York, everything
Yes.
close. So it's still a fairly competitive market. So if you have money, it's good because it makes your negotiation it makes you be able to negotiate in a stronger way.
Right.
I always
Um,
back to strategy though. So I am 100% sure that I can get a buyer into a home that qualifies with no money down and seller help if they have the right home buying strategy and mindset, and that is typically when the house has been sitting 60 days. So
mhm.
that, if you're very limited on funds but qualify in every other way, we can almost definitely probably find you a house where you can get in with little to no money down. Now you do have to have money for a earnest money deposit,
Yep. Mm-hmm.
and then you have to be able to pay for your appraisal. So you need a little bit of money to work with.
Right.
And
Um,
now we are not doing a lot of that because most people don't want to look at homes that have been on the market 60 days. So
yeah.
the shorter the amount of time the home has been on the market, I would say the more money you need, the stronger buyer you need to be. But,
Right.
if you're open to, if it's your first home, if you're open to putting a little sweat equity into the home and making your first investment in real estate, that's a really
Mm-hmm.
take.
Yes, absolutely. I agree. Grace has a question. She said, "What's the most unique profession you've helped?"
Whew, she might be able to answer this better than me. I don't know.
I know, 26 years, Janelle. It's like, whoa.
It's all like blending together.
I know.
Unique profession I've helped. I don't know. I've helped an acupuncturist with
She said a horse jockey.
private lending. Oh, we have helped a
A horse jockey. Yes.
horse driver. Yes. We had to do a self-employed bank statements program for our horse driver, and a horse driver actually drives the horses. He doesn't sit on the horse. He drives a cart behind the horse. So we learned something new with that profession.
Oh, wow. Yeah, that is a fun fact, I guess.
Oh, another fun fact. Do you know, this is very random from a book I'm reading, but we're on horses. Did you know that every racehorse's birthday is January 1st? I
No. Well, happy New Year, happy birthday to everybody, huh?
just
Oh, we have another question. What are the long-term pros and cons of refinancing a mortgage? And when is it financially beneficial to do so? That's a good one.
I think I heard it. You broke up just for a second, but did you say when?
It says, what are the long-term pros and cons of refinancing a mortgage?
Okay,
And when is it financially beneficial to do so?
okay, so that's a tough question to answer. I don't, I talk almost everyone out of refinancing that calls me right now. I don't think there's enough benefit for them to refinance typically. Now, that is only if they're trying to get a lower rate. With a refinance, we have a lot of different benefits and we help people in many different ways. So it would be like if they have high interest credit card debt, all at over 20%, and we can get them in the fives or six, then oftentimes we can wipe out that debt, really free up cash flow for their monthly budget, and make them feel a lot better financially, like they wouldn't have as much financial stress, which we have a couple of clients we're helping right now. Now,
Okay.
talking solely about just lowering the interest rate, I refinances typically still come with a decent amount of costs. So what we do
Yeah.
is we take the savings from your current payment to now and we put
Hmm.
it into the total cost. And if you can break even at 36 months or less, it may be an okay idea. So that would be, what would that be? That would be, um, if closing costs were $9,000 and you were saving 300 a month, then that could work.
Right.
I think that math.
I think that was almost, yeah.
So that's what we look at. We look at your break even point, and then
Okay.
beyond that is savings. So,
Hmm.
but then you have to say to yourself, am I staying in this house beyond 3 years? Because if you plan to sell in 4, I still wouldn't do it. You're just
Okay.
stripping your equity. I don't recommend stripping your equity unless there's a really, really good net tangible benefit to doing that. So
Okay.
if you want a refinance consultation and you almost want to be told why you shouldn't do it, you should call me because I will be very straightforward about it. I do not love refinancing just for rate. So I do love helping people consolidate their debt, getting cash out for home improvements. Those are all different kinds of refinances that I do absolutely love helping people with.
So what would you say to somebody who wants a lower rate or needs a lower rate so they can have a lower payment?
So if it's gonna help them, so
Hmm.
I'm working with a client right now and we can save her, I think it was like $157, but the closing costs were over 10 grand to get her a low, she's at
Oh, yeah.
5 right now. We can get her to 5.5. Her loan amount is not that big. The closing cost to get the rate that low was like 10 grand. And she's only saving $157 a month. So that math does not work out.
Yeah.
So,
Right.
so a bigger loan is going to be more beneficial monthly, but a small times just doesn't pan out. Doesn't make
Okay. Hi, Dawn. Thank you for joining us. Dawn has a question. She said, do you check to see if a house qualifies for a desktop appraisal if the buyer is putting 20% in order to make it their buyer's offer more
Yeah.
competitive?
If we have the address, we run it through and we actually try to get what's called an appraisal waiver. So if we have the address, we can run it through in advance of the offer so that you can make an offer if it's eligible to have an appraisal waiver, which means an appraisal is not needed at all.
Yeah,
So
I seen you post a tip about that. Yeah, that was really great information.
so yes, and that would make your pre-approval stronger. That would make your offer stronger. So
Hmm.
we strategize with our agents all day, every day to try to help get buyers' offers accepted.
Hmm.
So yesterday, for instance, I told the listing agent we could get the appraisal and commitment completed within 5 days of the fully executed contract, and then we could get it clear to close in 14 days. They don't want to settle till January 2nd, but that's what we do to win for our buyers and our realtors.
Yeah, yeah, I've experienced it, so I can definitely attest to that. That was
Yeah.
awesome. So,
So, yeah.
so the answer is yes, Dawn. Thank you for your question. If anybody else has any questions, or me and Janelle will just keep talking.
Right?
Right. So, okay. I was also telling someone that wanted to buy like a rehab home but they wanted to do FHA financing. I told them that there are loan products for that. Like,
Yeah,
can you speak to any of that? Like the different types of loan products available for people who want to go FHA financing?
sure. So you mean renovation or
Hmm.
okay, renovation. So there's a whole suite of renovation products, and there's conventional renovation and there's FHA renovation. It really depends on what the property needs and
Hmm.
how the borrower qualifies. They're both very similar. So here's how it works. You can buy the house, so it's the cost of the house plus the
Hmm.
plus a contingency reserve, which means that just means that if your construction overruns the estimated cost, you have a little more funds to dip into.
Okay.
Add those three together and then lend on that amount. So to keep the math simple, let's just say you could get the house for 300,000 and you would do a renovation for 100,000.
Hmm.
And then we would take a contingency of 10,000 just in case that $100,000 job ran over at all. So that total, we lend on that total that's at that point 410.
Okay.
And so we don't lend 96.5% on the purchase price. We lend 96.5% on the 410. So you're able to finance almost all the renovations.
Nice.
Yeah.
Nice. So like, what would be the qualifications? Like, is it a minimum credit score?
You need a 580 credit score and you need an approve eligible. So just because you have a 580 does not always mean you get approved. So it's,
Right.
but the minimum credit score is 580 and that's for FHA. It has to be 620 for conventional. And then I need to check, but we also have had VA renovation available as well. It comes and goes, so I would have to check on that, but that's a product that we have.
Okay. Yeah, that's awesome.
Yeah.
I had a VA client I talked to you about, remember, who actually wanted to purchase land and build. And when you told me that was an option, I was really surprised. Like, wow. Okay.
Yeah. So we have construction,
Mm-hmm.
one time closed construction program, and it covers FHA, VA, conventional, and I lost my train of thought. Oh, and
Oh,
it those you can also do a manufactured on your own land too. Manufactured homes are becoming a little bit more popular just because of affordability. They're a bit cheaper to be able
okay.
to do and put on your own land. So
Yeah.
you can do that product with manufactured homes as well.
Yeah, that's awesome. Yep. Anybody have any questions in the chat? Thank you all for joining us tonight.
Yeah. We want to
So
go ahead. I want to see what you have to say.
what would you recommend the EMD be on? Like, do you have like a tier program like for, buyers? For instance, like if somebody's buying a home for 300,000, would you recommend how much for EMD?
Okay. So the rule of thumb is that it needs to be at least 1% at a minimum.
Mm-hmm.
And
Mm-hmm.
the more you can do as an EMD, the more strength you bring with your offer. Because
Right.
really it's saying, I'm so motivated that I'm actually putting this up, putting this deposit down because I
Mm-hmm.
fully intend to buy this house
Absolutely.
even if we run into some issues. I intend to work through any issues we run into is basically when you have a strong EMD, that's the statement that you're making to the seller. So if you really wanted the house and you had word that there might be multiple offers, I would probably triple that.
Mm-hmm.
That's my personal strategy, but no less than 1%. anything less than 1% to me just shows like that you don't really have much skin in the game, and you're not super motivated to make it work.
Yeah. Yeah, definitely. I agree. So the main types of mortgages, most people think because they have a low credit score that they have to go FHA. Can you give a little more context into that?
Sure, you need a 620 to go conventional. So that is black and white. There's very few things that I find are really black and white in mortgage lending, but that's one of them.
That's one of them.
If you don't have a 620, you would have to do something different. That would be FHA, VA. USDA actually is, I think, a little harder than conventional in some cases. So you have to have a pretty strong score for that too. We'd like to see a 640.
Hmm. Okay.
So FHA is very flexible with credit score, flexible with higher debt to income ratios. So we do probably FHA is becoming more popular because the market is a little more forgiving now. It's not
Yeah.
crazy as it was. So we're some buyers that just really didn't have an opportunity in 21 and 2020 are it's opening up for them. So that's good.
Okay. Dawn has another question. She said, "What do you think about buying an investment property and using a fix and flip loan and flip the financing to DCSR and hold the property in the end?"
These are some good questions, Dawn.
Well, Dawn is a beast in the real estate industry,
Dawn,
so
is it Dawn?
Dawn Wilson, yes.
I wasn't sure. I can't see the thing.
Yeah. Yeah.
Um, huh. So
Dawn is a beast.
oh, I'd have to understand more details about any. I like to take it transaction by transaction, but I don't think that's an awful idea. I I just read something that I agree with is that the real wealth in real estate is the hold, not the flip, and
Yeah.
I believe that. So that's my answer. But tell me what you think. Tell me if you agree or disagree.
Who, me or Dawn?
Either.
Oh. Well, I agree. I actually was having this discussion with my son earlier, and I was telling him how some of the Dawn said 100. Yes, definitely. She actually has like 500s on here. I was telling my son that I grew up in North Philadelphia, and now like it's a block called it's 33rd Street, right? And the houses there are so like dilapidated, but they're worth like 800,000. Like, I
Yeah.
mean, these houses, 3-story Victorian style houses, and they need so much work, but they're still like worth 800,000 just to buy the property. You're
Yeah.
not even putting in the work yet.
Yeah.
So, it's like I think the whole, and some people that I grew up with, inherited a few of these houses, through their parents, grandparents, or whoever. But, now it's financing that work that's required.
Yeah.
But the house itself has so much equity, in terms of its worth. It's like, what do? You can hold it again,
Yeah.
work on it,
Mm-hmm.
hold it more, hold it longer. I think it'll be worth even more. I mean, even in the Temple area, like, I know someone who has a house around the corner from Temple University, and the house is worth 500,000 now. So, and they paid 20 years ago, they paid $1 because you used to be able to buy dollar houses in Philly. So, you know, I think holding is a good option.
Me too. And I do want to talk more about DSCR because I love that product.
Okay.
But to give an example, I bought a house for 115,000 in 1999. It's worth 550 today. So
Mm-hmm.
the history of real estate, it is the return on investment is very good. So
Mm-hmm.
um, there's that. But the DSCR program, just to delve a little bit into that, so you can buy houses as investment properties. Now you do have to have 20% down, but you don't have to qualify. So you can buy as many as you want. And what qualifies you is the rental potential on the property.
Right.
So that I love those programs. They're very easy to do. You have to have decent credit, um, and you need 20% down. But
Mm-hmm.
if you have a long-term real estate investing mindset, think in those terms, down the road in the future.
Mm-hmm. Yeah, definitely. Yes. So, I'll be coming to talk to you about that, Janelle.
Well, I was talking to everyone. I was it sounds like I was talking directly to you, but I'm just talking
No, I'm telling you, just be
including
prepared.
myself. Yeah.
Dawn has another question. If you are a seasoned investor, will you allow less than 20% down?
Um,
Oh,
the product that I use the most is 20%. I haven't done anything less than 20%, but there could be one. I would have to look into it. I I don't know off the top of my head, but
okay.
a quick search I'd be able to let you know. I'm almost positive it's 20%. Unless
Okay.
some sort of private investor or harder money.
Mm-hmm. Okay. Well, okay. So we've been on here for about 40, 9 minutes. So that was good. You have anything else you want to tell the people or?
So we had talked about this one thing that I had in my notes about people saying they're going to wait until rates come down.
Yes, 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 yes.
I do want to mention that. So hopefully rates come down. We can never predict it.
Mm-hmm.
So, but the thing is when rates come down, prices are going up. That's just the way that supply and demand works. So trying
Mm-hmm.
things like that usually doesn't work out. Usually it's like it's good coincidence that it worked out, but it's not
Mm-hmm.
skill in waiting for it,
No,
very
right.
time the market like that. So if you can afford it and you can do it now, I would do it because you're going to miss out on the equity you gain when rates do drop. Your house is going to go up in value, and that's
Mm-hmm.
value. So don't try to time the market. Just buy when you can afford to buy.
Yep. I
Invest.
just had that conversation with someone today.
Yeah.
Yes.
So I think we could end it there. I
Yeah,
think a good recommendation. But
absolutely.
we could hop on again at any time and answer more questions and maybe cycle some back.
Definitely. Thank you so much for your time today. And thank you everybody who joined the call, the live, and for all the questions. And if you guys have any questions or need any, support, advice, reach out to Jenel and I, and we will be glad to assist you. So just let us know. And thank you all for joining us. Look forward to more Real Talk with the Real Property Nurse. I will be bringing more of this content to you guys so that we can get some of these questions that you may have answered. If you don't know who to reach out to, you can reach out to us. So thank you all.
Good stuff, Keisha.
Thank you, Janelle. All right. Bye-bye.
Bye.